set up yet. Hang on. Oh, you're on. You're live.
Hey, we're live, and good afternoon, everybody. It's Danny Riley from MrTopStep, aka PitBullTraders, and I've got Tom from Blue Tree LLC in here. I met Tom back a couple of months ago. He's been teaching market profile for quite a long time, and he actually studied under Peter Stottlemyre, the wizard Peter Stottlemyre. And hey, Tom, how you doing there?
I'm doing well, thank you.
Good. Well. All right, so what rather than me, I mean, I talked a little bit about you. Why don't you tell everybody a little bit about yourself?
Yeah, it's I've been doing this since been a trader and in the financial services industry since 1987.
Great year.
As a matter of fact, I got hired at Lehman Brothers a week before the crash in 1987.
Wow.
So it gave me, actually, everybody's like, oh, bad timing. It gave me a really good perspective because, a week, I didn't have any skin in the game, but I saw total panic. I just sat back and observed.
Yeah.
From the analyst to the strategist to the broker, everybody in a panic, and no one knew what was going on.
Yeah.
At that particular time. It was just something new. We hadn't seen that since the Depression. A market reaction, but it kind of gave me the opportunity to sit back and say, I'm going to learn this. And that's what got me into technical analysis, is just watching the reaction off of October of 87.
Yeah. Well, that probably was enough to put a lot of people looking at it. But can you tell us a little bit about your teachings with Peter?
Yeah, it's kind of funny. Back in the day, we don't have the education back then that we have now. I mean, with the internet and everything else, and educational information was basically books. And we got I forgot what the platform was, electronic trading, because as brokers, we used to get pages. We used to get two books. One from the New York Stock Exchange and from the NASDAQ for charts. But anyway, they put on a program, this platform that we purchased, and it was before videos and everything. And they gave us, they had seminars on different aspects of, how to trade the RSI and the MACD and blah, blah, blah. And someone put out this thing from the MACD and market profile. And I started to watch it, and it was just very interesting because I always felt that indicators, and it's no offense to anybody, and I don't want to step on anybody's toes, but I always felt that indicators were kind of derivative of price action. It's price action dictated what the derivative was doing or what the indicator was doing. And I looked at market profile in a different way, and it kind of always resonated with me because it was pure volume and price. And getting that, I ran into Pete was putting on seminars up in the Sierra Mountains. His family owned acreage up in the mountains, and I guess his brother had a tennis camp, and they kind of combined it, and they had different cabins. So I spent a week with Pete, and I think there was 19 other traders, and he would just teach us all day long. We'd start at like 4 a.m, trucking through the woods with flashlights to get to the trading bug. And
wow.
It was awesome. We worked really hard, but there was a lot of information that he gave us. And, it just resonated me. It stuck with me ever since.
Yeah. Well, I mean, as we talked last night, I know Kevin Coy, who used to work on the Board of Trade floor. That was when Pete, I think it was like 78, I don't know, 78, 79. When I first started on the Board of Trade floor as a runner, I was in the grain room. And I actually do remember Peter being in the grain pits, but I didn't know anything about it. And then one day I got a phone call from my cousin Kevin Riley, who was working with Kevin Coy, who which was Peter's right-hand man at the time for helping teach the classes. And I ended up going over to the office a couple of times, which was just right behind the Board of Trade. And they had like I told you, they had a classroom that could fit like 30, 40 people, and they would fill those classes up. It was a big business back then. But now, where do you live, Tom?
Houston.
Yeah.
I'm from upstate New York, living in Houston.
Another transplant out of New York.
Well, from Buffalo, and as they say, everyone's from Buffalo. So
yeah, exactly. Well, anyway, so what do you want to talk about today? I know that we have.
It's I've been doing this. As you know, and just to preface this with Pete. Pete was a floor trader and kind of developed the genesis of Market Profile was for day trading on the floor. And he wanted a different way of looking at the market. And, technology has changed, right? And it's given us this opportunity. And I've always been much more of a equity swing trader. That's kind of my natural personality, risk. And it's allowing me with the technology to broaden this. And this is the basic concept with Pete. And I see a lot of traders, on YouTube videos and so on, talking about Market Profile, and they kind of miss the point. When Pete did this, the big thing that it did is it took time away. And what I mean by that is if you're looking at, intraday charts, if you're looking at a 5-minute chart, 10, 15-minute chart, whatever the case may be, it's time that dictates the bar to move, right? What Market Profile allows you to do, and the big advantage, and this is what most people miss, is by removing time, it allows price action to fall into their natural distributions. And by looking at that, even stretching that out, and what I'm going to talk a lot about today is merging of the profiles, looking at several days, and it gives you a different personality, and it shows you the personality of the marketplace. And again, I hope I could explain this and broaden some traders, even if they're intraday traders, to possibly look at longer term, if nothing else, for context. And I'm going to show you a bunch of things that show up, for multi-day merged profiles that act as support and resistance for intraday traders. So I think it's going to benefit both the longer term trader and the shorter term or intraday traders.
Yeah. Well, we talked about this, and you knew in the beginning that I'm more of a futures guy, but one of the offsets, or one of the things that we've known in our forum, is that a lot of the guys in there, they're trading options. They don't even talk much, but they're in there to try to get the flow of the S&P to make decisions on, option trading that they're doing, whether it be equity options or SPX, OEX, or CME, options, or whatever options, all equity options. So yeah, listen, what I'm going to do, I'm going to turn it over to you, Tom, and I'll be behind the curtain, but do your thing.
Okay. Again, that's what I want to do is just, I'm going to show you some marked up charts and why I mark them up, what I look at, and kind of show you what I look at as a swing trader. I'm going to use equities. These work just as well and I'm going to show you a couple of futures examples, but it works for both, or for all instruments and all time frames. And that's the really good thing about it. And one of the things I'm going to talk about today, and what I like to, is breaking the market up into different distributions, into their natural distributions. It helps look at the market. I'm going to start with the S&P 500. And as you could see, we've got a huge, up distribution here from bottoms of April up. But I want to bring this in, and I made a distribution. I'm going to erase these and put them back just to show you kind of what I've done. There's pretty much a natural, like you said, we've got that natural distribution higher. But I wanted to show you if I could put a merge profile just in here. And it goes from this gap. And one of the things traders like to learn, or I like to learn on a practical basis. So I'm not going to really get into a lot of the market profile other than showing you illustrations within the marketplace. And by putting a massive distribution from the tops here to this low, you see there's a couple distributions. We got a distribution here, and we've got a very large distribution in here. But you could kind of look at this differently. And by doing this, I'm going to show you, you could also look at this as it's a little bit more balanced in here. So it kind of gives you different personalities on how you break this up. Focusing in on for the traders. The most relevant for swing traders and for intraday traders is this distribution here. And this is what I want to show you. We've got kind of a breakout of what was somewhat of a balanced area in here. So if I put a merge profile in this area, and this just shows this bullish distribution higher, what you're seeing obviously is most of the volume is happening in this area. Now, let me just really quickly, the blue area in these merge profiles represents the first standard deviation. And for those in statistics class, 68% of the volume is happening in this area. And in this gray area is the remaining. But it bases off the point of control, which is the highest volume area. Now, one thing I didn't mention, and I should have, is when you're looking at, I'm kind of putting both, I'll say market profile, but the charts that I'm going to show you and the profiles that I'm showing you are going to be volume profiles. They work pretty much the same. There's a very minor nuances to them. For our sake, it's easier to show you. And there's, again, really not that big of a difference. There's no empirical evidence that says volume profile and market profile, one works better than the other. But it's a little bit easier for me to draw the charts and to illustrate what I'm showing you. There's really not that big of a difference. So getting back to the chart, you've got high volume in here. Now, you know, this represents, there's just a lot of volume in here. Prices have moved, as you can see, on this day, prices moved higher, but immediately the next day closed within that. That's a trade. It's, for all intents and purposes, a false breakout. By identifying high areas of volume, marking them and watching the prices go out of, I'm going to say value area, but high volume areas, and pulling back in is a very easy, very good swing trade. You know, stuff like this where you could kind of go through, and there is some, I saw this on the web, that there's, when prices go open up out of value and go into value area, there's an 80% chance that it goes to the opposite value, from the high to the low value area. That's incorrect. I've run the iterations of that, and it's 80%, roughly 80%, about 77% of the time, it goes and touches the point of control, which would be this area, and about a little less, about 68% of the time, it will go to the opposite end. So that's just a little clarification if anybody trades off of that. But anyway, these are nice areas, and you're going to see in a lot of illustrations that I'm going to show you is the value area acts as support and resistance. Value area or high volume areas, they represent something, and put this out there just for this. This is area of liquidity. A lot of trades happening in this area. There's a lot of liquidity for traders. You know, obviously you get up into these days where you start to see that volume goes down as prices get pushed up. here's a very good example. Let me zoom in a little bit. You can see that the volume is much less than it is here. So prices opened up here, they pulled back. Now, not a lot of volume. And then volume just feels more comfortable in here. That's how you interpret this. This is how market profile works, is you're seeing this, intraday distributions and how volume is feeling more comfortable at the top. Prices were rejected out of the value area or the higher volume area in this case and rotated back up. Again, good symbols. And for this, looking forward, you're kind of in a volume, the higher volume area. So until there's really a substantial break one way or another, you kind of have to trade for this, which means kind of buying the lows and selling the highs. And again, this is where the personality, as I'm saying, that market profile offers you, is you've got an opportunity to, take a look at, high volume areas and interpret them different than if you were just looking at just a bar chart, maybe a little pullback and it's trying to rally. One of the things I want to take a look at also, which I'll be throwing a lot at, is looking at relationships of value areas. And again, these are, in this case, the yellow areas and how they represent. It takes, when you're looking at 68%, it's a very good way. And what I use this a lot for, just at first glance, is how the value areas are in relationship to one another. This is the majority of the trades. It takes a lot of the noise of the market away. Value areas, obviously right here, you're looking at continuing to go higher, going south, it pulled back here and immediately went back. These are bullish. This is bullish until you get into here. And, we finally started to see a little bit of bearish movement in the marketplace. But, you're looking at right now, value area today is higher than that, which is bullish. But on the other side, you've got rejection of prices at the higher level. So it looks like it's going to kind of stay here and wait for a break of either today's high or tomorrow or yesterday's low. Switching to the Qs, and that was the S&P 500, the SPYs, for if I didn't mention it. Here's another example. We've got the Qs, and if you take a look at this area, it kind of looks like a higher distribution, but when you merge the profiles, you see there's basically two distributions. You got distribution out, but the main distribution is a balance area in here. And from the balance area, we have a distribution higher. And that's all this is. I wrote did the merge profile from the lows here to the highs. And you can see we got low volume areas, which represent areas of price inadequacy. There's not a lot of price competition in here. You've got a gap and prices continue to go higher. And that's what you're looking for, is are prices accepted or rejected? And this is a very low volume area. Our prices are rejected. High volume areas, our prices are accepted. And what's interesting here is what I wanted to point out to you here is you've got a high volume area that's basically from this area. And you could see prices came down and rejected. But, why were they rejected here? If you look at just a bar chart, there's really nothing that says prices were rejected. But if you kind of look at here, you got a high volume area within this day, and prices came down, and the high volume area in here, or the buyers that were in here, are supporting this price. And this is what we're trying to look at, is we're looking for market participants, supply and demand. Are they defending previous price zones? We're looking for high volume area, like in here, are the people, excuse me, the people that buy in this area, are they going to defend it? And yesterday they did. Prices came down and were immediately pushed back up. And again here. So this is somewhat bullish. Again, we've got overlapping volume areas, or value areas, excuse me. But, we got a little bit of a bullish tone because prices were rejected here. And again, like the S&P, kind of the same thing. Today's action is pretty quiet, obviously. We're not getting much of a movement. So, and again, with the Qs, watch this. This is another area going forward. You've got a lot of volume in this area, which is kind of the point of control for this whole distribution higher. If prices do break, expect on the Qs, the 579, 580-ish area is going to be an area to watch. How are prices reacting? Are these people that are buying here, are they going to be supporting their price? Moving on, I want to look at the bonds. The bond market, if you take a look at, again, we've got a balance area in here, but we have prices broke out. Just to show you give you an idea. This is within here. This is, price pulled back. Once it rallied, you got another distribution higher. Now we're pulling back. What we're looking for here is the price action with the high volume. These participants have put that in. All in here. All these guys that were buying, that were pushing prices higher, they're getting retested. And it's going to be very interesting to see if, it kind of looks like they're trying to defend this a little bit. But if they could push, it looks like they want to push prices higher. I put a merge profile in just on this down, thing. So we've got a value area above us, which is probably going to act as a little bit of resistance, especially in this area. If, again, as I was mentioning, if we could get prices back up in here into this area of acceptance, traders, it's weird how traders will find, and you will see over and over and over, where you find an area that was accepted previously. If prices get back into there, traders feel comfortable in previous areas of acceptance. If it gets in here, it will probably hesitate before it moves higher. You'll see this time and time and time again. So, and again, the same thing, we've got a little bit of support from these guys, from these traders, possibly pushing prices higher. Again, we're at the lows. Let's see how it reacts if they push them higher. But if not, expect, possibly, if it breaks out of value, probably looking someplace into the 111 area. One of the things I want to look at also was the Russell. Russell's been very strong lately. And I put a merge profile in from the gap higher on August 22nd. And again, we've been kind of sideways. Prices broke out. Draw a line in here. You got a very low. So you've got kind of a support and resistance area in here. And we're trying to rally. If not, we may have a pullback down. And that's kind of what I'm thinking with them is if prices can't hold this area, we should probably rotate down to the low of the volume or the value area, which are probably about the 233 area. But again, you've got prices here. Which seem to be holding today's action. And this happens all the time, even on a smaller, on a zoom in version. All that volume, especially yesterday, is holding the market. Especially if you look at the point of control of yesterday, it's probably the one pushing the prices up. If that is violated, expect to rotate down. But at this particular time, as I mentioned earlier, the value area relationship between yesterday and today is bullish. So, this, not overthinking this, but we've got a bullish sign. A break above today's highs, we could continue to rotate higher. That's the way I'm looking at it. Watch the value area relationship and how the value areas look. Let's see. Took a look at gold. Gold's just been a monster. And the only thing I really wanted to point out in this is, we go back. It's had a huge distribution higher. We've gone up over 100%. Then we obviously have been in balance since April, a well-due balance. We broke out. In fact, we're continuing to trade above this high value area. This low volume area, I would stay bullish. The low volume areas also act as support and resistance. And it's very important when we're setting up these distributions. Distributions always start at low volume areas. Like if you're trying to break these out, the distributions always start at either gaps or very low volume areas. And it makes sense. Excess stays or gaps are very good starting points and ending points for distributions. And that's what you take a look at when you're looking at this. And again, here's a good example of that is prices were kind of stuck in this area here. When they did break out, you got obviously multiple distributions on this day, but prices seem to start a new distribution. You stay positive in this area, the bullish area, and in that regard, stay bullish unless this area is broken. What is it, 37.46 area? If this is broken and prices aren't supported, we may have a little bit of a pull back to roughly the 3,600. Crude, it's very difficult. There's really nothing here with crude. It's just been flat. Really not a lot going on. We, tested above that and prices are pulling back. If we get back into the value area of this merge profile, prices may rotate back down. But right now, it just seems to be a balanced market. One other thing I didn't mention is balanced markets represent areas of indecision in a way. It's kind of a magnet. It's a lot of liquidity. A lot of traders are playing in there, but nothing has changed. So they're kind of just gyrating back and forth, and they're looking for information from the market, whether to go higher or lower. So once you're in balance areas like that, look at it. You also see is once you get in balance areas, you've got an area here of buyers supporting the market. It runs up, it comes back down into this area. And again, these guys, these traders here are supporting that price. They're showing up every single time. Volume seems to dry up, they push prices higher. And it's going to be the same thing here is if prices if we start closing down under the, 34, below 35, there's a pretty good chance that we're going to rotate down. I'm going to go to a couple of ETFs that I trade. I look at I'm kind of a top-down guy. I look at what I like doing when I trade is I always look at the market to get the personality of the market, if it's trending higher or lower. If we get markets, I want to own a strong stock in a strong sector in a strong market and vice versa, a weak stock in a weak sector in a weak market. It's really nice to be trading with the sediment at your back. And again, that's what I do is when I'm looking at it, the first thing I do is I want to look at what the market's doing as a whole. Is it trending higher? Is it bullish? Is it sideways? Then I look at all the sectors. I'll look at the top 9 sectors out of the 11, and I'll break those down and say, okay, these are the stronger sectors and the market's moving higher. What stocks are doing well in a top sector? And for example, taking a look at technology, this is the XLK. I use the select sectors. They're very, and the reason is they're just, there's a lot of volume, and it's very important when you're trading. So, we've been sideways here before we broke out, and these have some gaps in it, but I kind of drew this profile here is from the bottoms to the top of here. And I just kind of wanted to see you obviously have a lot of volume here. This will act, if prices rotate down, as support. You've got a gap here. If it gets in there, the gap rule is, chances are it's going to fill that gap. But we've got a little bit of a pullback. And what I wanted to show you here is I kind of drew kind of a little bit of a balance. We've got a gap. So I said, well, what's this distribution look like? And I do this often, is overlay different distributions of what I think until the market comes into a little clearer view. And right now, this is what you're seeing. You're seeing high volume in this area. And we're still bullish. And you're looking for the value area today is pretty much overlapping. So we've had a little bit of a sell-off. And here's what you kind of take away. We were obviously been bullish. We've got a distribution higher. We've had a little bit of a pullback. Number one, we've got low volume. Prices were rejected down here. So we kind of have a pullback. Prices were rejected. Now we've got overlapping volume. If we get a breakout above yesterday's highs, there's a good chance that we're going to rotate up and test the highs. And that's just the way it works on these smaller. You see a lot of low volume prices go down, test to see who's there before it's pushed up. I think I don't know if he coined it, but Jim Dalton, who also is very big into market profile, he trades market profile very much. He says he uses price as a advertising tool, and it's very accurate. They pull back and they're advertising. They're waiting for buyers to come in, which they obviously pushed prices up yesterday, and we're again overlapping. Wait for some kind of confirmation that the prices are going to go higher. We've got some for the discretionary. Again, this is the XLY, the select sectors, and kind of the same thing. We've got kind of a sideways action. We've got another balance area up here, and now we're kind of testing whether we're going to go back into balance here. This is going to act some support. If this 235.17 area is broken, we may rotate down, easily rotate down to the to the opposite end. But there's a pretty good chance that this thing is going to rotate down into probably the 226. So this is a little bit more suspect than the technologies. But again, look at it today. We've got, it kind of came into this value area. And in fact, the high value area is probably put in here. And prices, again, it comes into value, the combined value area, and there's no volume. It kind of, prices went down there and immediately turned up. And here's where most of the volume, which is above the volume area here. And today we're pushing higher. So, this may rotate back up into the 241 area. If this area is broken today, there's a very good opportunity. This rotates and retest the highs of the 242. And that's the way you look at that. The healthcare is, kind of been a little weak, but it's a tough industry to kind of take a look at. You've been balanced. We've got at the top of the value area, we've got more balance. And we start to break down. If we break down, this is kind of as I mentioned, an excess day. Prices broke down. If this area, the 133.84 this is usually a very good indication that prices are not finished probing to the downside, and it's probably a very good short. Again, at the 133 area, in my opinion. And again, I think if it does, there's probably a very good chance that it rotates under 130.5 area, or at least test the buyers that were here. The builders, or the materials industry, we pulled back, and I wanted to show you this. As I mentioned a couple times, if you look at this area, this is easily an area of balance. I think everybody can see it. You know, prices really haven't moved in that area until they shot out. So when you're looking at this, this is really important when you're taking a look at market profile and combining the charts or merging the charts. You've got an area here that prices have been pretty stable. Buyers dominated and pushed the prices higher. So all the people that were buying in here, we want to see when it's retested, and this is a really good example of this, it comes back in here. What are these guys going to do? Are they going to support their prices? Well, today seems like it is. You've got a value area that was down here in yesterday. Value area is definitely higher today, which is a bullish indication that these traders are going to defend their prices. You don't know how high, but today's looks like it's going higher. If we get higher on Monday, we could easily rotate back up to the 90s, but most likely back up into the 91, 92 area. But again, this is a really good illustration to show, the balance area in here, or the buyers, the demand that was created are the people that caused the demand going to support their prices. Let's see, I want to go to, and the next one, communications, which has been obviously very strong. Again, very strong bull market. It's really been pushing the market higher. One of the key things, but you've got two areas. You've got this area of high volume area, and you've got this area of high volume area. We've kind of broken down, and many times when you break an area, when you have kind of this, I don't know, barbell or this huge low volume area in here, prices tend to go from high volume area to high volume area. Again, prices broke down from here. They tried to rally. If you get if this area is broken, this 116.50, I think there's a pretty safe bet that you got a couple points on the downside. Now, it doesn't sound like a much for a hunt, but if you're looking at options, this is the way you play these. These are fairly quick moves, fairly high probability moves, and with options, you just take advantage of that. Those are fairly good, 3, 4, 5 day trades. So those are the sectors that I wanted to talk about. There's a couple setups. I know we're kind of running out of time here. So I don't know, Danny, if you need to just jump in to wind things down, feel free. But there's a couple things. One of the things I wanted to talk about and bring to your attention that I'm looking at is the financials. Financials have been really strong. We've got, looking at the macro, we've got one huge distribution higher. Couple, we've got a little balance area in here. But we've got a distribution higher here. When you put this profile on, again, prices came down, and you kind of take a look. If you take this out, what caused these prices? If you, let me just take this off real quick.
look at here.
Hello, you there? Anyway, you take a look at this area in here. What stopped yesterday? I mean, if you look at a normal chart, you don't see anything. But on here, you've got a high volume area in here. And again, this is stuff you don't see on normal bar charts. Don't show you this. But this high volume area was a really good time yesterday. Prices opened up. Volume was fairly low. It came down with no volume at all and shot out of here.
Hey, Tom.
Yes.
Hey, Tom, listen, I think you're on an absolute roll here, and I'm absolutely loving it. And I just talked to Marlon. Hey, if you want to continue on, you're getting more and more people coming in as we're doing it.
Well, you know what? I got a few. The only thing, I'll just finish up on this. I want to talk about the financials. There's 3, and we'll call it. Just call another 5 minutes.
Okay.
All right.
But so you're gonna do charts for another 5 minutes, and then you're gonna.
Well, just point this out, and I'll finish on the charts.
Okay, and then we'll talk a little bit.
Yeah, you've got what I wanted to show you, and I thought, and again, this is a really good example, is when you turn, this is interesting. And these are all, again, I don't think I mentioned, these are 30-minute charts, bar charts. You've got, when you're looking just at a bar chart, it's not showing you where support and resistance is, especially in this case, high volume areas. And again, these traders that were buying here and buying here are defending these prices. And that's kind of what you want to see, and that's, as traders, that's what we're trying to do, that's all we're doing, is we're trying to find areas of supply and demand, right?
Yeah.
Ultimately, that's kind of what we're trying to do, is as soon as we find that these guys are, an easy trade this morning was buying Citigroup. Yesterday, we just closed at the highs. Meanwhile, to put your toe in the water, but to go higher. And you know what? This is Goldman Sachs. That was Citi, by the way. Goldman Sachs, the same thing.
And Tom, would you have an option strategy that you would suggest?
Yes, well, I'm pretty simple in that regard. I do directionals. That's all I do.
You buy calls, or you buy spreads
or puts, and once in a while I'll put a spread on. But just generally speaking, I just make it as simple as possible.
And let me ask you something. Usually, when you do this and you buy calls, and then you put a put on it, would you have been better off just with the call?
Oh yeah, no, that's yeah. But again, here's
only because I would say this, because Marty Schwartz picks all these unbelievable stocks all the time, and then he sells calls against them.
Oh really?
Yeah,
no,
it blows the trade up. I mean,
well, I guess kind of the rule is it just depends on how high the premium is, right?
Yeah.
They're selling calls if they're over 50% of the range, but I'm not that smart.
Yeah.
I keep things simple out of necessity. But again, it's just like Citi. You've got these guys in here, and it's the same formula.
Yeah.
Prices opened up in this area, and they immediately shot them out. Today was, an easy trade higher, and you're going to see the same thing with Morgan Stanley. And when you get redundant stocks doing the same thing, it's strength to me. It's just more confluence and more people wanting to do that. So,
one of the Tom, I'm so happy that we met. And the thing is that, we started talking about today, and really what struck me, and this is no bullshit. People, there's no way that anybody could do what we're doing if we tried to set it up. You know what I mean?
Mm-hmm.
And it's all very real. And when I was talking to Tom today, he said something that really struck me. And it brought me back, and there's a lot of guys in my forum right now are in here. brought me back to the days of WB, that when he was in our room, and I kind of explained a little bit of that time. And I believe that there's certain people in the business, and I believe you're one, and you made it apparent today when you were talking, that really believe that eventually, I hate to say it, we're all going to go, Tom, but eventually all this great knowledge that you have is just going to go away. And by doing what you're doing exactly what Charlie D, the famous bond trader from the Board of Trade, said, who was really, really a great guy and charitable, and taught classes at the Board of Trade before the bonds opened. And you said the same thing that he said. I feel I've got a lot to teach people, and I don't want it to just disappear, and Charlie D said that it was up to guys like us to teach the next young trader. And not everybody needs to be young to learn, right, Tom?
No, absolutely not.
And, and when we started talking, I think the fascinating thing about this was, I'll admit, I was looking for you to come in and, do S&P futures and, Big Danny and MrTopStep and the S&P and all that. There's other things to trade out there. And and the more that I'm not saying I'm down on the S&P, I'm doing pretty good today. But I think that, look at gold, right? I mean, if you wanted to trade a commodity, but I love what you're doing with the stock options, Tom. Mm-hmm. And you told me about your friend, and most of the volume is in equity options. We all know that.
Yeah.
That's where it's all moved to. Whether you're just buying calls or buying puts, or you've got strategies or you're putting on, the volume is by far the largest out there of anything. And then you've got zero dated options that have really added a new twist to it. But I appreciate your time today, Tom. And I know.
I just hope it's been, that someone gets something. We've all stood on the shoulders of other people, right?
Yeah.
And people taught you, traders have taught me. So there's that natural progression, right? You kind of go, you learn, you get comfortable, you become successful. And then it's time to turn back and say, it's time to teach the rookies or the younger people.
Yeah.
And
time to give back.
Yeah. And it's, it's enjoyment for me too, to be perfectly frank, is if I can help someone, it's good for the soul.
You're speaking my language. Okay. Well, listen, one last thing, Tom. We do the morning update, and David Dubay did one, I think, this week. And Handle Stats does it.
Mm-hmm.
I think that if we could maybe next week, if you get time, one of these days, like later in the week or whatever, we could bring you in like a half hour before the S&P is open. And we could run over like some S&P charts. It's not everybody doing futures in here.
Okay.
A lot of equity option guys. And, go over the futures and kind of what you're seeing, a couple of like crude oil, gold, the S&P, NASDAQ. That's it. Real quick. Boom, boom, boom. Mm-hmm. And then lay out some stuff that you're looking at in some of these equity options.
If you feel it's a value, I'll be more than happy to do that.
I think it is, Tom. And, look, I know there's a lot of really, really great, market profile guys out there. And I think every one of them has something special that they zero in on, that they become like really good at. And I know from talking to you that if you've got you like trading these, stock options, and I don't want to pull you away from that. And what I want to let you know is that you are able to do whatever stuff you want on these things, minus walking around naked. But the thing is that I think equity options are the biggest out there. So let's dig into that.
Yeah,
Let's hit that. Let's hit that hard too.
If it's you feel it's a value, absolutely.
I do, and I think everybody else would agree.
Yeah.
But anyways, listen, let's call it a day.
All right.
And thanks for your hard work and great.
Thank you very much for the opportunity.
And thanks for meeting Marlon today too.
Okay.
Okay.
All right, guys. Thank you very much.
Thanks.